list of healthcare services and products, and insurance is different than healthcare. Insurance is there to help you pay for that when it's so expensive that you never would otherwise be able to pay for it. Why do people fly from all over the world to the U.S. for our healthcare services? It's because we have the best products at the best price, period. Care industry itself, so the products and services themselves, don't have the same problem with cost as our insurance industry does. I'll explain the phenomenon that's driving the cost for insurance, but our healthcare industry is about 3.5% inflation, which is just about monetary inflation rate, same inflation rate as other industries as well, year over year for a long, long time. So it's still free market, still competitive and innovative, and like I said, people come here from all over the world for our world-class healthcare system. Healthcare system, I say, not health insurance. And so we'll talk more about why those two are different. But the fact is, a lot of people will say things like, well, you guys spend way more per health outcome than other countries, or other countries have way better health than you do and you spend way more. That's the argument, which is bullshit, because Americans have different health choices. We eat way more, we're fatter, we're lazier in general. There's all sorts of data points that aren't taken into account there. Also, the fact that we have more healthcare to spend money on means that we're going to spend more on it. You go to sub-Saharan Africa, they're not spending a dime on healthcare. They're not spending a dime on cars or TVs either, because those industries don't exist, and they don't have the discretionary income to be spending on those types of things. So the fact that America has an innovative, expansive, wealthy, incredible healthcare industry means that we will be spending a larger amount of our income on those services. Also the fact that we eat more, our lifestyles are different, all of those play into the equation. So people love to cook the books. There's more propaganda around this than just about anything out there. So I'm not going to be your personal encyclopedia and go dig up a bunch of facts. Number one, because it's hard to do. You'd almost have to conduct your own scientific experiment. I'm sure there's lots of commentary debunking a lot of the claims, but the fact is the U.S. has the best healthcare out there. To say a couple extra things about the healthcare industry itself. So if you have this vibrant, competitive, innovative market that is constantly, generating new products, new services, new medical tests, new medical devices, which we do, we lead the world in that when we supply the world with incredible services, then you're going to have more people buying those, more people investing in those, and they still may make poor healthcare decisions. They still may, smoke 2 packs a day and go drinking every night and get in a car crash, and they died at 61. So you'd have to have an incredibly nuanced study to observe the facts or the results of an incredible healthcare system. But the fact is, innovation and a competition blossom out these worlds of new opportunity in terms of products and services, and it becomes more expensive for a while, because now you can get, for example, a pacemaker that didn't exist before, but it cost $200,000. And you get this kind of S-curve of innovation, increased cost, increased spending in that industry. And then after a while, the innovation brings the cost back down because there are competitors. There are people who are improving on the technologies. Technologies work together and coalesce, and they make improvements, unforeseen improvements that they didn't have in the initial R&D cycle that brought those products about. So you have constant improvement, constant competition, constant innovation that will first increase the total spending as that an industry expands out into the GDP, the pie chart of the spending for the country. An innovative and blossoming industry will become more and more a piece of the expenditures. Think about Nintendo Wii, for example, or gaming. That once wasn't mainstream because it wasn't good enough to be mainstream. No one cared about gaming. After a while, it became mainstream. So, yes, we spent more on gaming than any other country in the world. And did it increase our happiness? I don't know. Anyway, so that's the point, is that after a while, it does bring the cost back down, and the overall experience that industry can bring, the overall wealth that industry can bring the country, well, it is the world, because people fly here and we also export these services across the world, is huge. And so, don't let anyone tell you that we spend too much for a health outcome. The rest of the world is subsidized with our technology. The other thing is, say we do spend more. than anybody else per capita on a particular health outcome. Who's spending the money, and why are they spending it? They have obviously decided that it is worth spending it on. If I want to get tests, x-rays every other day, or if I'm a boxer and I'm getting MRIs to check for maybe they're not medically necessary, but maybe I want them. Should people be allowed to spend their money the way they want to? Should they be allowed to trade with someone who is willing to offer a service if they want to spend their money? Of course, the answer is yes. Don't kid yourself. We want to be able to do what we want to be able to do, as long as it doesn't infringe on anyone else's rights or hurt anybody else. So don't let anyone con you into thinking, well, these things aren't medically necessary, so we don't need to be spending the money. Hey, your bureaucrats in Washington, D.C. don't get to tell me what I need to be spending my money on, especially when it comes to my health care. This is the typical argument and the typical framework within which the government and people who want to see benefits from an expanding government wants to seize control of an industry and install itself as a monopoly in that industry, take over every facet of the industry, and offer itself as the one and only a la carte, cafeteria for that product or service. No, thank you. I don't want the DMV of medical services. I don't want the DMV of health insurance. I don't want the DMV of any of that. I want competition. I want innovation. You should go look up. There's a great meme that shows the U.S. shuttle that we use to go to the moon, whatever, launch satellites, do space exploration. And they say 1965, and they got a picture of the shuttle. 1975, same shuttle. 85, same shuttle. 95, and then I believe they're comparing it to U.S. cars, and they just show how cars evolve over the same. That's the private market, and lots of innovation from lots of competitors constantly competing to offer the best product and service to a customer, versus a government who has a monopoly, and so has, total command over price, total command over supply. It's no different in concept than the Soviet Union supplying bread for their citizens. So that was a long-winded way of saying that the free market is the only way to provide competition, innovation, and services, and people should be free to spend as much as they want. Now, whether or not they can spend is another question. There's a moral element to this. People will say, well, this is healthcare. You have to help people. Well, no, you don't. You're not owed anything in this world. A need is not a claim on slave labor. Because I need something, no matter how dire the need, I can't force someone else to help me. I can't say you have to help me. At the point of a gun, I can't say help me, fix my broken leg. You can't do that. That is immoral. So there's that. There's the moral argument. Then there's another argument of feasibility. Say we come out with a brand new surgery and it costs $2 million and it could save, say, 20 million people's lives. Well, 20 million people can't afford a $2 million surgery. So as an example, same concept, we could probably fly a bunch of people to the moon right now. We could feasibly do it, but we're not going to do it because we'd have to divert so much. We'd have to forcibly divert so much of people's labor and efforts into flying those people to the moon that it's not worth it. No, when people are ready to fly to the moon, they will pay for the ticket to fly to the moon. When the ticket has come down in price enough that it's economical, people will fly to the moon. Then you'll say, well, flying to the moon is different than some healthcare need. Well, yeah, but the concept of the feasibility isn't. It's the exact same concept. Just because it exists doesn't mean we can do it on a large scale or on anyone's, scale. If a surgery or a medication costs $20 million, it's $5 billion of R&D, you can't force a whole society to absorb that cost for one person or three people. When it comes down in price enough that those people can afford that, then then that's the case. Or their insurance companies can afford it. This is why you need to have insurance companies who can determine their own fate, determine who they will cover, what they will cover, how much they'll cover it. Because the insurance company who does say, hey, that new experimental surgery that's $20 million, we'll cover it, no problem. And their prices skyrocket by 30%. And so their $10 million or their 10 million member base, say they got 10 million customers, are all paying 30-40% more. They may not like that. They should have the opportunity to say, hey, I'm going to buy from insurance company B who doesn't cover that service, and I'm okay with paying less for the event that, if that event happened to me, well, that's a risk that I'm willing to take. I'll pay 30% less and know in the back of my mind that if I got that disease that only that $2 million drug can cure, I'm out of luck. But in the meantime, I'm not subsidizing one person or some small population of people who are getting insanely expensive drugs. I'm not doing it. I'm not willing to pay for that. So that's how you decide. You have insurance competition, which will determine the overall competitiveness of all the insurance. And that puts pressure on the drug company. If none of the insurance companies will cover the drug, then the drug company's got no business. So they either abandon the drug until it does become economically viable, or they work on reducing the cost. Or you have entrants into the market who say, hey, they're selling that for $2 million. I'm pretty sure I could sell that for $200,000 or $1.9 million or $5, whatever it may be. And it keeps happening until people aren't, until it's not worth entering the market anymore. Well, I'm not going to start up a business to make, the money's not worth it. So that was a long-winded way of addressing that, but hopefully that made some sense.